Hello and welcome to another weekly video. Sam Volkering here with Nick Hubble, and we are going to talk markets. We're going to talk geopolitics, but we're going to kick off by talking brass tacks, or just specifically tax, actually. Nick, there's change. So when was it? Last Friday, um, Burnham had won Makerfield, or was in the process of winning Makerfield. It was sort of a foregone conclusion by the time we did the video, and we said that things were going to change, and I think that's pretty clear by God. What was it? Was it Monday? Was it Sunday? Starmer had made his resignation speech. Wes Streeting had folded like a deck chair merely hours after Starmer resigned. So any hopes of a contest for the leader of the Labour Party and subsequently Prime Minister was more or less out the door, even though Starmer had said that they would go through the process of electing a new leader. Well, it doesn't look like it. It seems like there's a bit of infighting actually happening in the Labour Party. But what does it mean? So let's be honest. It's pretty clear that Andy Burnham is going to be the next Prime Minister of the United Kingdom, albeit not officially yet, but we would assume he will be. What happens next, Nick?
Yeah, I'm expecting a pretty radical shift to tax policy, to the nature of tax policy, how the tax system works. And it's going to be pretty bad news for investors specifically.
Uh-oh.
This is obviously a key part of the left's playbook to tax unearned income, as they would put it, ignoring the fact that there's risk involved, unearned income equally with worked income. And it sounds sort of reasonable. Maybe it even is, ideologically speaking. But there's a
Oh,
problem with
don't
doing
say
things
don't
this
say
way.
taxing wealth is reasonable in my presence, Nick.
Yeah, well, you can make the case to a sort of university student, perhaps. Mm. But what makes this interesting is it won't work in practice anyway, as so many of
No,
ideas to the
no,
left.
or not.
That's why we abandoned the system that I think we're going to be going back to twice in the last 50 something years, 52, 50, anyway. And the basic idea is right now we tax capital gains dividends under a separate system to how we tax work income, usually lower.
Mm.
Uh, that's fine. That's the norm globally. One of the few exceptions to that is Australia, which actually lumps together all of your income and then taxes it according to the tax brackets, progressive scales. It does, however, have a tax discount for capital gains that are held more than 1 year, and it has something called franking credits. And the effect of those two is to bring the tax rates on investing back down to the same sort of level you'll see in places like Germany and Japan and the US and the UK. Those two tax breaks are getting abolished, which means Australian investors are going to be taxed at their marginal rate on capital gains and on foreign dividends, which they actually already are.
Yes.
What makes this interesting? So a high income investor is paying 47% tax on dividends from foreign companies in Australia right now, and they will be paying the same for capital gains in the future, more than double, I think, the UK rate. The reason I think we're shifting towards this system is for those ideological reasons. The reason it doesn't work and why it was abandoned in the past is because it puts Australia currently and the UK in the future, if I'm right, at a tax rate that is much higher for investors than other countries. Never mind comparing the tax rate to work, compare it to other countries. The reason the comparison to other countries is so important is because people don't tend to move much, but capital definitely does. Investors' money moves to best. That's why most countries around the world have tax rates that are surprisingly similar for investments. Their income tax rates are very different. What you pay and what you get from government services are very different, but the tax rates on investors are actually surprisingly similar. And the reason for that is money flees to the countries that treat you better. So you can't treat investors disproportionately badly. Australia's trying to now. It's going to fail. I think the UK is going to be next. It's going to copy Australia's reforms. We're going to lump together all the income and we're not going to give tax breaks to investors anymore on capital gains and dividends. And this is going to be disproportionately disastrous because the UK is obviously a major financial center and it benefits disproportionately from the financial services industry that is based on political stability and tax policy stability. So if we lose that designation or that reputation or that perceived value in having your money in the UK, then you're going to be in trouble economically. The financial services industry will be in trouble. The legal services industry, accounting, finance, all of these industries that rely on tax stability and policy stability uh, will be leaving the UK if I'm right about how tax policy shifts, apart from just the fact that our investors will be paying significantly more on their capital gains and dividends.
It's grim. I'm not gonna lie. That's pretty grim when you lay it out like that. And we see that currently in Australia, they are abolishing the capital gains tax discount at the moment, which is a 50% haircut on anything held for longer than 12 months. For what it's worth, it looks like that the UK is going to move to that as well, and that capital gains will be taxed at marginal rates or indexed in some form to CPI and then taxed above that. But it means tax is coming for anything that you earn or any investment that you make to grow your money, which fundamentally is like if you want to run through the most ridiculous, stupid taxes that have ever existed in the history of anything, I think capital gains tax is probably at the top of my list, at least, because it completely disincentivizes anyone to actually generate some sort of positive outcome for their future with their wealth. And it's the government deciding that, well, you did a really good job of something, so we're going to punitively punish you for it. Um, Anyway, I can't change the fact that there will or won't be capital gains tax, although I do believe there are plenty of countries. I mean, I know there are plenty of countries out there that don't tax capital gains. And there will be the countries that attract plenty of talent, plenty of founders, plenty of startups, and plenty of capital. And that you already see it. And there are endless amounts of articles online that you will read, posts from founders, posts from company people that have started and founded and grown companies that often pay early employees in stock. And stock compensation is a very important part of growing small companies into larger companies to contribute economic benefit back to the country that they're in. When you start to punitively tax capital gains, then you punitively tax these companies that are trying to grow, that are trying to contribute back to the country that they're based. So basically, they nick off from the UK and go somewhere else. And they'll probably end up in the US, to be honest, where there's more capital and more friendly tax rates. So this is what people voted for. So that's, you kind of, you get what you pay for. Now, it's not going to change in the UK under Burnham. It's going to be maybe new things, new taxes. That should be fun for everyone. But there will be an opportunity at some point for people to have a vote, and that should be interesting in the next couple of years. It seems like a snap election is not going to be called, which will just infuriate, I think, the general populace even more. So, Nick, I do want to ask you, if taxes are coming, what can the average investor in the UK do? Like, to sit on your hands and do nothing, to stick your money in cash is not a great idea. Should we be investing more into ISAs and SIPs and those sorts of structures? Because from what I can see, at least for the time being, at the time we record these are still reasonably tax positive friendly structures that can be utilized. Maybe that changes, maybe it doesn't, we don't know. But for now, at least, it seems like that's a reasonably good idea. So while there might be more tax coming, is it the death knell for investing in the UK by UK investors?
Well, there's lots of small adjustments you can make, right? The one I want to focus on, unfortunately, is the fact that this idea of raising taxes significantly on investors only works if you can stop them from leaving the country, because too many will simply leave, and that will undermine tax policy itself. So what I'm worried about is that they're going to impose an exit tax, probably not by that name. And once again, we can use Australia as the inspiration for this. Australia has called its version of the exit tax, a deemed disposal tax. And what that means is if you decide to leave Australia permanently, you have to pay tax on your capital gains as though you had sold the assets, meaning you don't actually necessarily need to sell them. You still need to pay the capital gains tax on them. And the idea is that it creates a massive disincentive for wealthy people to leave. Of course, it also creates disincentive for wealthy people to grow their wealth in Australia in the first place. So ambitious people who are not yet wealthy should leave as well. And my worry is that that's coming. So people who want to leave the country should probably hurry up because at some point, I think the exit tax will be coming in so that then the subsequent tax policy changes can occur. And like Sam said, there are lots of places you can go where your capital will be treated in a much better way. That's sort of a depressing take on things. The more optimistic version is that you basically bet that this is going to go so badly that policies are going to have to be changed dramatically again soon and reversed in massive fashion, possibly leaving investors with a better off situation after all is said and done. We both know Nigel Farage. We know that he's very likely to favor a tax system that heavily favors investors, or even just a balanced system compared to other countries in the OECD. So there is a chance that the worse this gets, the more ridiculous the proposal, the better off we'd be. And we're more likely to get a more ridiculous proposal under Burnham than under Starmer. So it's actually maybe it's a sign to celebrate that things can only get better if they get worse first, but then they'll get much better as a result. So I think that's the thing that investors are trading right now is tax policy and foreign tax policy. But if you are thinking about leaving, I'd suggest hurrying up because if that exit tax gets passed, it's a massive disincentive and it really limits what you can do subsequently with your money and your wealth. So there's an added sense of urgency now to making that decision. How long it takes for politics to fix this ridiculous tax policy proposal that I think is coming in the UK and has already come in Australia is really difficult to figure out. For example, if it goes dreadfully wrong in Australia in the next few months because so many people leave, actually it sort of already has, but we won't go into that, then the UK might sort of be absolutely ridiculed for even trying to pursue the same thing and it might never pass. Alternatively, we had actually in Australia in the last 10 years, a few examples of tax policies that were brought in to tax the resources industry disproportionately or to tax emissions disproportionately. And those things got repealed pretty quickly after they were passed. So if we get a Conservative or a Reform government in the next few years, there's a good chance that one of the worst tax policies would be repealed. I'm sure people are laughing at the idea that the Conservatives might actually deliver what they stand on, but there's at least some hope.
Yeah, the parallels for people that aren't that plugged into Australian politics and the Australian tax system, we talk about this now because the parallels between both countries are phenomenal. Both with Labour parties that are left-leaning, both with very horrendous tax policies, really, that punish. They say it's for the working class, but if you're a working class person that started your own business and are looking to grow that and move your own financial position forward, you can still be working class and be punitively punished by these. So it actually often punishes the people that they pretend that they're trying to protect. If you start a butcher's and then you create a company and you issue shares in that company and you grow it over time and you get to a point where you eventually want to sell your business because you've done really well and it's turned into a really flourishing little thing, you get smashed for it. So it's not just about people that invest in Apple and grow their stock value over 20 years. It's not just about people with millions of dollars in investment accounts that they grow into tens of millions of dollars. It's about people that are trying to create something in the country for the betterment of themselves and their family, and be it working class people as well. And they have the boot of the government very fiercely forced on their head to say, nah, anything that you create, we are going to take a slice of that, which doesn't just seem fair to me. But then again, that's the situation we are left in. Now, we've spoken a lot about, I guess, the direction, the scary direction that both Australia and the UK are headed with current politics and tax policy. Seems like it would be a very easy platform to run against. You just say, these guys are really stupid with everything they're doing, so we are going to do the absolute opposite of that. Take your pick. But then again, opposition parties aren't all that smart either. So we'll see how that plays out. But I want to touch on there's a lot of fear aside from that, which is yeah, I feel a bit down after that conversation, Nick. So I want to
Well, it's going to get worse. It's going to get worse. I know what you're going to get, where we're going with this.
lift
So,
the mood here a little bit. Lift the mood. I could lift the mood, but then England drew 0-0 with Ghana the other day, so that sort of depressed the mood. They've got another chance to get some goals, as do our native country, Australia. So, there's some movement happening in the World Cup. Whether it's coming home to the UK is one thing. It certainly is not coming home to Australia this year. It'll never come home to Australia, but maybe one day in a quarterfinal we might meet up and it'll be an amazing event. But that wasn't the thing that I wanted to talk about to lift people's spirits. There's a lot of fear about the AI bubble is bursting, and Monday it looked like it was on track to burst wide open and rip the hearts out of AI investors. Micron was down 13 or 14%. Hundreds of billions of dollars wiped off their market cap. SanDisk down double digits. Amazon, Google, Nvidia smashed like $1 trillion wiped off the value of a lot of AI stocks. I don't know why, because it's just Micron hadn't even reported their earnings at that point, and then they reported earnings yesterday. Sorry, Wednesday night after the market had closed in the US, and they obliterated the bears and the fears. Like, not obliterated is really too soft a word. I'm not sure there's a strong enough word to describe how impressive their financials were. $41 billion in revenue for the quarter, earnings per share at over $25 per share, where Wall Street expectations were around $20. So they outperformed earnings per share by 25% in one quarter. They'll probably do about $200 billion in revenue this year off the back of a 35 and a 41 now. I expect they'll be over 50 for the next quarter. And for the full year, that last quarter will probably be closer to 60 because money is being spent. They are generating so much cash and creating so much profits for that company that it could sit next to Nvidia in the $5 trillion range. And after they reported earnings, the stock was up 50. I've got it right in front of me, 15.81% in a day. SanDisk, that makes storage predominantly, but also a whole bunch of other stuff related for data centers, was up. This is a $350 billion company that was up 21% for the day in trading. Like, it is hard to fathom the size and scale and sheer amount of cash these hardware manufacturers are making. But any fears of an AI bubble bursting should be very much parked aside when you just go and read the transcript from Micron's earnings. Look at the results. Understand just how big a project it is to roll out artificial intelligence infrastructure around the world, from the hardware makers to the warehouse, the AI factory builders, and the energy and power side of things is immense as well. I was doing some reading on Rolls-Royce this week. Again, they have just inked some deals in terms of putting modular nuclear reactor technology in India, Sweden. They've obviously got work going on in the UK and Czech Republic. They are branching out into all sorts of regions. And one of the fastest growing sectors of that company is related to data centers. So there's plenty of things happening in the AI rollout that are exciting. And there's an inkling that maybe there's an increasing amount of it coming directly from the UK as well. But I just want to put people's fears aside. The bubble is not bursting. Arguably, there's not even a bubble to burst. Maybe there will be. When Micron's a $50 trillion company, maybe we were in a bubble if that happens in the next like 2 years or something like that. Maybe then, maybe we're in a bubble. But for now, it's obscene how far they are ahead of what the bears and the fears are talking up. So if you're worried about getting obliterated on some of these AI plays, fear not. Things are still looking up. But we have chatted dour stuff today, and that's a little bit more uplifting for where things are heading. But we are also going to be talking about all this stuff and plenty more very much live in about a week and a half. On the 9th of July, we are doing a live YouTube broadcast. Nick, me, and a colleague of ours, and we're going to be talking about where to invest. We're going to be talking about should you be worried about some of the fears that are out there in the market? Should you be excited about investing in the market? And which sectors? Oil, gas, commodities, AI. Where do you go? Energy. There's lots of opportunities out there. We're going to be covering all of it, primarily looking at the question, if you had £10,000 to invest today, where should you invest it? And we're going to cover all that and loads more. So I think that's at, I can't remember if it was 2 or 3 p.m. Someone's going to get me in trouble for that. But it's on the 9th of July. You'll be able to register anyway. There'll be a QR code or a link in the description below this video. So just jump on that, give you all the information you need. I'm looking forward to it. As I said, it's going to be very live. We're going to be fielding questions from people as we go along. So jump in, ask us questions, call us idiots, whatever you want. I don't care. Someone will moderate it, so I never see it. But, I'd love to hear what you think. Nick, before we head off, any closing remarks or things that you wanted to cover off on in 30 seconds?
I was just going to ask you how our host is going to do. What are you expecting?
He's going to have trouble wrangling you and me to keeping us concise and on point and making sure that we give people the value and information that they so rightly deserve by tuning in and watching us.
Yeah, I'm looking forward. If he has a go at interrupting us, it should be a good fun. We can all start shouting.
Yeah, it'd be like an episode of The View. All right, that'll do for this week. And thanks for watching, everyone. We'll be with you again next week. Bye for now.